what can we learn from folks outside of solar? Because we've been having this conversation now many years, both here, not to mention at the other conferences, and of course, every day as the vendors in the room speak with the buyers in the room about what we've got. So as a wise person once said, there's nothing new under the sun, pun intended. So I thought it would be helpful to just look at the trends going on outside of solar software specifically. So if you roll all the way back to the early stages, it was a monolithic application. You got what you needed from Microsoft. They delivered the business in a box with everything you needed from start to finish. Then as the cloud began to become competitive, there were services that focused on functional vertical niches, as you can see, marketing, sales, support, HR, et cetera. Now, these were the early winners. After the early winners came to market, there were additional companies that came which took a focus on either application, functionality, features and benefits, et cetera. And so you started to see fragmentation even within these functional areas. So not just a Microsoft, not just a Kissmetrics, but a bunch of options for what type of marketing software best suits your needs as a company. Then, more recently, we've started to see even more unbundling of SaaS offerings. So, for example, instead of having the marketing solution that you use for all your marketing needs, you now have a bunch of tools that actually come to market as API. So for anyone that's actually built an app, you'll use Stripe for billing. For anyone that's bought something, you've probably used Stripe to actually pay for it. SendGrid for email marketing, Twilio for SMS messages, and Algolia for in-app searches. These are all functions that 5 years ago, when you needed a search, you needed to build search. Now you just call Algolia, you pay them a few cents per query, and you're done. So these are things that basically allow people to focus more on the functional areas that work for them, and allows the app developers to actually build the proprietary things that are actually proprietary for them. Now, the industry isn't done. We're seeing further evolution beyond that, because once you've got a few dozen applications that you're piecing together into the final app, you also need, for example, a hub. So, for example, Alivio is a support product that actually sits on top of a number of other support products, and actually lets non-software engineers develop things within the app, as well as call other applications and sort of have essentially a management layer on top. Plus, on the bottom, you have this trend of unbundling, where, for example, Supportive is in-app messaging that doesn't even provide a full solution for in-app messaging. It's basically a couple lines of code that give you just email integration with in-app messaging. So you see things that are not even competing with the, for example, support tools, but management layers on top, and then even the sort of bare bones raw tools underneath that because they're focused and stripped down, actually enable both anyone from the sales and marketing team to the engineering team to bring these in. So again, so many layers of products beyond just having the single monolithic solution for your support, marketing, HR need. Then, of course, there's going to be layers on top of that. So if at some level, Slack, I assume most people here know of or use Slack. Slack, you could argue, is a notification layer on top of all these other apps. A lot of companies will have Slack integrated with GitHub, Salesforce, Stripe, et cetera. So you're not logging into Stripe to check the latest trends in Stripe. You're actually getting a feel because of Slack. Slack actually fits into this ecosystem. Similarly, Segment allows you to essentially dump all of your customer data into one consistent set of data format, and then port that between apps. So that essentially lets the owner of the data port easily between applications. So essentially, we're not just seeing a fragmentation, but that fragmentation allows tools around there to build management layers, visualization layers, alert layers for that data. So ultimately, that gives the entire software ecosystem a much more focus. Now you've got teams that are focused on building one specific functional area. They're able to deliver better products to the end customers, to the end developers. And again, it frees up people that are using these to actually build the things that make sense for them to build, the things that are actually hard for them. I mean, frankly, Folsom Labs, we use half of the tools that I've mentioned here, and it's been great not to have to think about billing, to just use Stripe for billing and call it a day. So the other thing about this is everything I just talked about was products and tools for the entire world. Additionally, you can think of, software for solar is a very specific niche. There are other vertical niches out there, and there are other tools that have actually built entire businesses around providing APIs, services, data products just for specific industries. So this is, again, and by the way, a lot of these slides are inspired by Point 9 Capital, including this one. And some of these examples are fairly relevant to the solar industry. Examples where you've got on-demand APIs for background checks, APIs for imagery, APIs for real-time air quality, et cetera. So there are things happening where many other industries are having a flourishing of products available. Some, of course, as monolithic solutions that are available, but many that are just APIs that you're just going to call and provide a specific set of data for that industry. By the way, we're lagging these guys because market size-wise, pretty much every tile on the screen is about an order of magnitude larger than the solar industry. Actually, the thing that I thought was most interesting, the US travel industry is about 350 billion. The travel agencies alone are about 40 billion. And I actually meant to ask MJ, I don't know what the dollar market size of the US solar industry, but I'm going to guess we're in the ballpark of $40 million, of 40 billion, which is funny that we're roughly the same order of magnitude as travel agencies, which to me seems very mom and pop. But hey, we still have growth to go. So taking a step back, the trend has been clear. The trend is not towards single solution to rule them all. The trend is not towards M&A and consolidation so that you have one vendor. The trend is towards many vendors, and that allows the buyers to actually get what they want. Those who can go through the trouble of evaluating the vendors, selecting the vendors, are able to build the solutions that they want, and most importantly, differentiate. So if you think about differentiation, at the highest level, if all solar developers sold the exact same systems in the exact same way to the exact same customers, economic theory would state, we take our costs down to marginal cost. Margins are zero. It's differentiation specifically that allows for the health of the industry. When we are going after different segments in different ways, we don't have to compete on price. And this differentiation, this fragmentation of products, is critical to the differentiation of us, of you all, and us as an industry to not sacrifice margin for the sake of closing the deal. Now, speaking of the solar industry, as MJ said, this is our second year doing a software workflow and solutions survey. We actually partnered with GTM to get a more balanced set of respondents. For those that were in the room when we presented last year, they were like, well, can you trust the data if it only comes from Folsom Labs customers? Which is why we don't present market shares, because obviously that data is tainted. But certainly, this allowed us to get a really good sense for what are the trends in the industry. At the highest level, the priorities are still the same. Growth is what we care about. We are not, as a cohort, focused on cutting costs. We are not, as a cohort, focused on cutting bait and getting out of solar and getting into other industries. Growth is still the objective, with a slight nuance that some of that growth comes from differentiation and moving into other geographic markets, moving into other product areas. You see there's a slight bump in adding services outside of PV, getting into other markets. But by and large, the top things that matter, filling the funnel more and improving your speed as you move through that process. But one of the things that came out in the data is evidence of greater differentiation between types of companies. For example, if you look at the behaviors of companies by their size, you see clearly that as you grow, the types of leads, sales, and marketing activities that you do changes. And we talked about this a little bit last year. This year is even more stark in the data. Look at, as the companies grow, referrals fall from being nearly half of your source of new revenue to barely a quarter of your new revenue. So that's a big trend in terms of how those companies behave. Even more so is what they're looking for when they're looking at vendors. In fact, if you compare, so again, these are similar to the slide that MJ presented about all the things that we need as an industry. If you break it down by the size of the company, you notice some interesting things. The smallest companies that have a headcount of 10 or smaller are looking for all-in-one tools. So those companies are looking for a solar-specific CRM, project management, all-in-one tool. They want the business in the box. But the biggest companies do not want that. The biggest companies, they want databases. They want specific tools. They want the specific SaaS products that fit into their workflow, because they've got a workflow that works for them. They have specific pain points within that workflow, and they're looking for specific pains that fit that. They're not looking for the all-in-one solution. So in some ways, you could argue that if we present the overall evolution from the Microsoft to the hundreds and thousands of vendors, even within the solar industry, different companies are going to move through that evolution, which is actually natural. When you're a 5-person company, you kind of don't really have the team to deal with assembling too much. As you get to be a 50-person, 500-person company, naturally your sophistication increases, your need for these tools change. Then additionally, we see similar things happen with, for example, CRM. So what's interesting here is that the bottom two, Excel and Google Docs, still matter greatly. But as you go from a sub 10 to the sort of 11 to 50 headcount size, and by the way, these tears are roughly to get the survey into roughly equal chunks. So that's not to say that the market is exactly like this, but of our respondents, that was roughly a third by these 3 headcount breaks. So as those small companies become medium-sized companies, they're using a lot more tools. They're not all using one tool. There are different flavors of what they're looking for in their CRM. And in some cases, that still might be Excel or Google Docs. And then it's when you get to the larger sizes that you start to see consolidation around Salesforce, for example. But even then, there's still a number of other tools that people are using. Finally, the area where we saw the biggest and most interesting differentiation between types of companies is the rate of growth. So when you look at what the top goals are, again, like we said, total population, it's all about leads and speed. But if you look at each type of company based on their historical and planned growth, the slowest growing companies are focusing on making their customers happy. The next quartile of growth are focused on increasing the funnel, getting more leads into the funnel. Then the third quartile is focusing on improving their close rate. And then finally, the fastest growing companies are focused on actually speeding up their process. Who here knows Maslow's hierarchy? There's basically the most fundamental needs of your business are happy customers. You don't have that, nothing else matters. Then the next layer is you want to fill the funnel as much as possible. Then the next layer is once you've got that funnel filled, you want to improve the close rate as much as you can. Once you've got that machine working, then you focus on turning that crank as quickly as possible, as effectively as possible, with the same resources or whatever. So in some ways, the growth trends of our industry show, you might argue, the evolution as companies go from being low growth to high growth. But in many ways, it's a Maslow's hierarchy of how you grow a business, starting with customers, getting to the funnel, and then finally getting to operational excellence as you really try to push the boundaries of how do you double your business year over year. Additionally, these fastest growing companies are focusing on, for their priorities in new software tools, they're looking at speed and operational excellence, and essentially fit my workflow and help me work faster, consistent with what we saw on the last slide. So again, this cohort is consistent in what they're looking for. They want things that make them work faster. And then additionally, and this we actually cut the data slightly differently. Here we said of the people who claim each element of their business as their primary differentiating factor, how fast are they growing? So this is no longer saying of the top quartile, how do they behave? It's saying if you are a company that focuses on low prices or aesthetic objectives, how fast are you growing? What do you see at the top? You see companies that focus on a consultative sales process and that focus on turnaround time, getting things turned around faster. At the middle of the pack, actually bottom of the pack, is we offer lower prices. The companies that offer lower prices are growing slower than the overall population. It's the companies that focus on the customer and the turnaround times that are growing faster. So this is good news. Just like what we talked about, differentiation allows you to not just compete on price. For those that are, that are just race to the bottom, they're not leading the industry. It's those that understand the customers and understand the workflow and processes around those customers that are able to set the highest growth rates for themselves. Additionally, the companies that are growing fastest are more likely to do processes in-house. They're more likely to use drones and high-res imagery. They're more likely to not just use storage, but to, once again, see storage as an opportunity to differentiate from their competitors. And finally, they're more likely to proactively look for new products. This cohort of people, the fastest growth, they are not waiting for trade shows. They are not waiting for referrals from friends. They are proactively making things happen, making phone calls, coming to conferences like this in order to sort of see what's on the market latest. So in other words, there is a clear difference in what the highest growth companies do, both in terms of their strategic priorities and in terms of their behaviors in the market. They are, they are more often than not focusing on speed and workflow, focusing on a consultative sales process, focusing on new technologies, including drones, imagery, storage, focusing on proactively seeking out new technology, which maps exactly to why all of us are here today. All of us, hopefully, are in that top quartile of growth, either as a solar developer or as a vendor that wants to help those of us in the room get into that top quartile of growth. So with that, I'm going to turn it back over to the team at GTM. I guess I've got 2 minutes if anyone has questions on any of the data that I presented. They'll be available afterwards. Yes? Yeah, I can pass. So the slides have the contact info. That was, I think, a European company, but I think they've got global coverage. So they're not focused on solar, but I can pass along the name of the company, and you could contact them. Absolutely. Yes? There were some, none that were interesting enough to really strike me as a break from what we would expect. So I'll pass along the data. We can actually sit here and just kind of pace through some of the extra slides. You know, I had like 70 slides, and the GTM team was like, "You're not going to present these 70 slides, right?" And it's like, "Don't worry, don't worry." So yeah, I'm happy to share any of that stuff. Any other questions? Yes. Yes. So if you take the sort of quartile versus quartile, the largest companies, which the top quartile of revenue was above 20 million, they did grow a little bit slower. So there was for the smallest 3 quartiles, they were all about the same. And then for the largest companies, their growth rate fell from roughly their target growth rate went from say 25% to roughly 15%. Again, we could look at the specific numbers, but that's directionally off the top of my head what we saw. Yes. You know what? It's a great question. We didn't ask that, and so I could make up whatever numbers I wanted to, but I think it's a great question to ask the panelists as we go through the day today. Great. Thank you, everybody.